Well, welcome back to Finance Uncut. On today's episode, what is the best asset to own? In my opinion, and in the opinion of a couple of legendary investors, it's silver. So in this video, we're going to have a look at a couple of legendary investors who say that you must own silver right now. And we're going to go through some charts and some data, which in my mind says that silver is the best asset class to own. And guys, don't forget, if you like this video, please hit that like button, give me a thumbs up. Really appreciate that. Anyway, let's cut to a clip with these two legendary investors.
Gold and silver.
Okay.
Silver. Oh, it's the best conductor of electricity that we know of. Way better than copper. Oh, we're going now more toward climate change? That means more solar. Oh, don't you use, what do you use silver in? How many different areas that are going to be affected in climate change?
Yeah.
So where do the prices of silver go? Where are the companies to invest in? What are the products that are going to be used for climate change? What are the companies to invest in? And let's go back to that climate change. They had that young woman, that girl that was making the news every week before the COVID war broke out. It was climate change.
Yeah. Greta.
So, yeah, and that's what's going to happen again. But that, I always mention this, nobody can predict the future. People say I'm a futurist, and I'm not a futurist. There are too many wild cards. Who would have ever believed, the COVID war? And so you don't know the wild cards are going to be played in between this that are going to change the game like that.
Sure.
Never could happen. Look what's going on in the Middle East. Oh, Middle East. Well, what's going on in the Middle East? Oh, you mean between Israel and Iran that keeps heating up and getting hotter and hotter? Mm-hmm. Oh, where are oil prices going to go if things break out over there more? Oh, what will that do with inflation? So again, you have to look at the big story.
Well, I have some silver that I'm holding in my hand as we speak. Yes, I do have some in the closet and under the bed. I'm an old peasant. When things go bad, I want to own some silver and some gold in the closet. Now, the politicians and the academics say, nah, silver and gold are worthless. Don't bother. Well, all of us old peasants know that when things collapse, we better have some gold and silver under the bed. So I have some, and I will buy more sometime in the future. I have no idea when. I know about the movement. I hope they drive silver to 1,000, because I certainly own plenty of silver. I think it's probably unlikely. It's very difficult to do something like that with a huge commodity like silver, but I mean, it can be done. The Hunt brothers certainly drove the price of silver up an enormous amount. It can be done, and it has been done. If they do it, more power to them. If it gets too high, I'll have to sell. I don't want to sell my silver. I want it for my children, but I'm aware of it. Squeezing the price of silver, which is a huge international commodity, will be difficult, but more power to it. The Hunt brothers did it.
So having a look at the bullish case for silver, in this chart, we've got the decrease in COMEX total inventory, while there's been an increase in the PSLV since the start of the squeeze, which you can see here. So when we look at the technicals on silver, we know that silver did break that $28 mark, but we really need to see it break through that resistance and hold and close there for a couple of days. But this chart looks bullish. It looks like silver is about to break out, and we could very well see silver hitting that $30 mark. What we need to see then is it break through that and hold and maintain it. And then, to be honest, $40, $50 silver, I don't think we'll be too far away. And when we look at this technical chart, once again, it just fell through that $28 mark. Once it gets above that, breaks that and holds, as I said, I think $30 silver very, very soon. Once again, if it breaks that, there's a few resistance levels. There's even a bit of a resistance around that $35, $36 mark. However, I don't think that's going to be much resistance. The big resistance is right here, $28 and $30 mark. Once it moves through that, I think the momentum's going to carry it much, much higher. And that's not just me saying that or thinking that. That's even some people who haven't been as bullish on silver. In fact, a lot of you watching this video might think some of these people, and I'm not going to mention their names, are actually part of the opposition, let's say. I really love this chart. So the silver price, you can see bottom right hand corner, has been above the 30-day moving average for a little while now. Now, if you go back, have a look at the other bull market in silver, when it broke and stayed above the 30-day moving average, it just went on an absolute tear, and that's what it looks like we've got here. So, you know, we just need patience. And so keep an eye, if you're a chartist, if you want to keep an eye on some charts, keep an eye on this chart. This is very bullish for silver. Another thing I wanted to point out, now I shared this chart in previous videos. However, I've got a couple other charts to show after this, but it relates back to this chart. It relates back to where we are. Are we comparing where we're moving now in this inflationary environment to the 1970s, to the 1910s, or to the 1940s? Now, the more I've looked at this, and Lynn Alden has just done a tremendous amount of work on this, I think the 1940s look a lot more similar today. Debt to GDP levels, interest rates where they're being held, fiscal deficits over loan growth. So in this chart, you can see in the 1940s there, right in the middle, loan growth actually fell, contracted, went down. Yet government deficits went through the roof, and we had an increase in the broad currency supply. And that's very similar to where we are now, where in the 70s it wasn't quite that way. We had relatively strong loan growth. Government deficits were not completely out of control. They were highish. But we had that broad currency supply growth in the 70s. So there's some differences there. And so when we look at nominal versus real interest rates and inflation, let's have a look at March 1947. So we had nominal interest rates at less than 1%. So similar to now, we've got suppressed interest rates. We had inflation spikes throughout the 40s, and the highest one obviously there is 19.67%, which gives us a real interest rate of negative 18.86%. Now, I've been banging on for a long time that the one of the biggest tailwinds for gold and silver is negative real rates, and you can see in this this time period, we had 3 spikes of inflation while interest rates were kept down, and so we had really deep negative real interest rates. So as CPI continues to grow, we hit 5, 6, 7, 10%, maybe more. Some people are saying more. And interest rates, through what the reserve banks around the world do with their quantitative easing and their bond buying program, then we're going to have real deep negative interest rates. So I think this is very bullish for gold and silver in particular. Now, also, look, I like Jim Rickards, and I like others that talk about velocity a lot. Okay, I do. However, it is not the be-all and end-all. People like Jim say that inflation is all to do with velocity, but it's not. It's not. So once again, we can go back to the late 1800s where we had very high velocity, albeit falling. We had very low CPI growth. Yes, in the late 1910s, velocity picked up and we had high CPI growth. And then vice versa, it fell in the 1930s, and obviously we had deflation in that period. But once again, have a look at the 1940s. We had velocity that fell during that period, yet we had CPI growth go up. And then in the 1970s, we had low velocity, or at least flat at best, yet we had high CPI. And then in the 90s, we had high velocity or increasing velocity. You can see that in the 1990s, yet we had low CPI growth. So inflation and velocity actually doesn't have a very good correlation at all. Now, I'm not disregarding velocity at all. I'm not throwing it in the toilet, but what I'm saying, it's not the be all and end all. People like Jim Rickards says it's all about velocity, all about velocity. But the data and history just doesn't match up with what Jim's saying. I'm sorry, Jim. And when we have a look at this chart, so the last two times monetary velocity was this low. Okay, so, you know, this is Jim's argument. Look at velocity, it's in the toilet. Okay, we've had it before, folks. Okay, it's the lowest since 1946. So the last two times money velocity was this low were both really bad times to own bonds. So bonds got crushed on a real basis in the ensuing years by the devaluation of the US dollar in 1933. Okay, and then the severe financial repression between 1946 and 51. So we had that financial repression. Now, if you follow legends like his name's escaped me right now, Russell Napier. He's talking about, you know, he's been a deflationist for 20 plus years. Last year he's just turned on a dime. He is now an inflationist, and he believes we are heading for financial repression. And this is what we had during a large portion in the 1940s. Anyone that held bonds during that time with such low interest rates while inflation was so high, you were getting crushed. So velocity is not the be all and end all, Jim. I'll tell you what some people say though, like Jim Rogers, for example, that if all this savings that has been built up, if it does get out and start, that velocity really does pick up, then look out. That's like pouring petrol on the fire or gas on the fire. Latest data, UN Food and Agricultural World Food Price Index. Look at where it's heading. So we're seeing inflation everywhere. Now, want to know where silver prices are headed? Well, just have a look at the gold price and then pick your gold-silver ratio. Jeff Clark tweeted this out in the past week. So, if you think gold's going to 3,000, and although the gold-silver ratio might fall to 40, then you're looking at $75 silver. If you want to go 1980 low, we know First Majestic, Keith Neumeyer says that the gold-silver mining ratio anyway is 7-1. So for every 1 ounce of gold, they're mining 7 ounces of silver. So the true mining ratio is really 7-1. But what are we around now? 70-1. The other interesting thing is, for the first time in history, that there's flows now moving out of Bitcoin. So some people have argued that that one of the reasons why gold and silver hasn't really boomed is that a lot of the funds that would have gone into gold and silver has gone into cryptocurrencies and Bitcoin. Well, now we are seeing a flow moving out of Bitcoin. I shared in my last video. Actually, it was the video before that. Sorry, that JP Morgan was saying that the big boys are now moving out of Bitcoin and moving into gold. So gold does well, silver does well. So once again, if it wasn't bullish previously for gold and silver because everyone was flowing into Bitcoin, or if everyone's flowing out of Bitcoin, that's got to be a good thing for gold and silver. So when we look at the US personal savings rate, and this is, you can replicate this all around the world, in the Western world anyway. So same thing with Australia, Canada, New Zealand, UK, European nations, same thing. So with what governments have done fiscally, it has got into the broad currency supply. People have got savings. This is another argument that Jim Rickards and others say, well, people have saved it, so it hasn't got out into the economy. Well, Jim Rogers argues, yeah, that's right. They've saved it. Wait until this really starts getting out into the economy, chasing goods and services. That's when you get super inflation. Okay, so when we look at the personal savings, then we look at inventory, so the supply side of things. It's in the toilet. It's in the toilet. So you've got more currency units about to chase less goods and services because they locked countries down, nations down, cities down. We stopped producing things and we threw more currency at people. So that's really the basic original definition of inflation, the expansion of the currency supply. Austrians say, well, that doesn't guarantee prices will rise. You then have to look at the supply side. And if the supply matches the currency increase, well, you're not necessarily going to get price increases. But if the supply side stays the same or decreases while you're throwing more currency units, obviously the currency units are going to lose value and the price of those things that those currency units are chasing are going to rise, or you just need more currency to buy the same goods and services. So this is just inflation, and it's going to get worse. The US total population out of the labor force. So, and Australia is actually having a similar issue, probably not as bad as the US at the moment, but people are being paid to sit at home. People are earning more currency sitting at home than they are actually out there producing goods and services. Let's see how long this goes on for. There's a lot of push for MMT, universal basic income, and with this we're seeing wage pressures. We're seeing wage pressures because businesses are having to offer higher wages to get people to come back to work. And every time we see this kind of thing happening in the mining commodity industry, whenever there is labor market issues in the mining industry, it just coincides. I don't know. Maybe this is just coincidence, but it really seems to coincide with a commodity bull market. And you can see that from this chart. Every time there's been labor market issues in the commodity and mining sector, a commodity bull market begins. And so we're seeing that now. So, I've shared multiple videos. I'm very bullish on commodities, even though I think they've had a great run and they may pull back a little bit. They may go sideways for a period of time. I still think we're in a super cycle, a bull market super cycle. And even some of my deflationary friends who have been preaching deflation for the last 12 months and are still on the deflation camp, ultimately think that once we've had a bout of deflation, then we're going to have super inflation, stagflation, and commodities will be one of the best things to buy at that point. They just think we're going to have this. But they were saying that, when, all these commodities were half the cost last year, or even more in some cases. And the precious metals stocks to S&P 500 ratio. So gold miners, silver miners now outperforming the S&P 500. And I expect this to continue. I've got a video coming up with some wonderful graphs and data, which actually are alarm bells going off regarding the stock market, especially growth stocks, tech stocks, all of this. And it should be a big, big alarm for people. So I don't know. What do you guys think? Do you agree with Gerald and Jim Rogers? Do you think silver's one of the best assets to own right now? Do you think we are in this inflationary environment? Do you think it's going to get worse? Do you think we're going to have financial repression, like Russell Napier thinks? Do you think we're going to see negative real yields increase? Love to see your thoughts and comments below. Let me know what you think. Don't forget to hit that like button. If you haven't subscribed, hit the subscribe button, notification bell. You guys know what to do. Anyway, guys, thanks very much for tuning in to this episode. Take care, and I'll see you again on another episode of Finance Uncut.